question is often posed as to what percentage of a portfolio one should have in REITs. REITs, bearing in mind, is the way to access listed property. It's the way to own a stake in some of the great iconic buildings in South Africa. The mistake we often find, though, that people make is comparing REITs directly to investing in equities or investing in bonds. And rather what we would put forward is that REITs is its own asset class in and of itself. And therefore, when one looks at an asset allocation, it's not a question of equities, bonds, and cash, but rather equities, bonds, cash, and property as part of that portfolio. Some asset consultants suggest that a balanced portfolio should have anywhere between 10 and 15% in property. But when one looks at it, and to, I suppose, strengthen the case for investing in property, if one looks over a 15-year period, you find that property has significantly outperformed bonds to the extent of approximately 13% per annum. Property has also outperformed equity over that same period by around 6.4% per annum. So really what you find is that property has a long track record of outperforming the other asset classes. So therefore we would encourage investors to look at including property as an asset class in and of itself within their portfolio at levels that they feel appropriate to meet their own risk criteria. But when doing so, bearing in mind you're buying into a very strong performing asset class that over the long term, which is really how to manage and to evaluate assets, has outperformed the more traditional equity and bond asset classes.